You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. Welcome to the show, Keith.
Jim, thanks for having me on.
Well, for us in Vancouver, looking just over the border, interesting times in Alberta with the election of an NDP government. First time in 44 years that they haven't been run by the Conservatives. And, of course, before that, it was decades of social credit rule. So they've never had a left-wing government before.
No, a big change for sure. It reminds me so much of the Ontario election 25 years ago when Bob Rae won on the last weekend. And all throughout that election, Bob talked about things that he was pretty confident he'd never have to follow through on. And then all of a sudden he did. And it was interesting that after he left office, after he got booted out after one term, and he ended up joining the Liberals, a slightly more center-right party. So it'll be interesting to see here in Alberta how this government does. I don't think they're as near as ideological as Bob Rae's group was in Ontario all those years ago. And of course, when you work in a one-industry town, it's a different dance than when you're king of the hill like you are in Ontario, and you got all kinds of revenue sources. In Alberta, there's one. So it's
well, of course, too, I'm thinking she grew up in Fairview, Alberta, which is just 60 miles from Peace River, Alberta, where I grew up. And there's something about Albertan DNA is it doesn't matter if you're left or right-leaning, all of us are pro-business. Well,
I think that the entrepreneurial spirit is definitely alive and well in Alberta. And when you listen to Rachel, she doesn't, the new Premier-elect Rachel Notley, she doesn't really talk like we need to be really that scared. I think that a lot of times these electoral campaigns, things get said that really just help you get elected, and then you just kind of got to figure out how the best way to implement it with the least amount of pain. But she doesn't have a lot of room, Jim. That's the big thing. Like, certainly she talks about raising royalties. Well, on natural gas, prices are so low right now, there's no room to reduce royalties on natural gas. You're going to see all kinds of natural gas production get shut in and job losses happen very quickly. Oil, there's probably a little bit of room if they wanted to, but of course, again, you're at a situation here where in Alberta, you're at the end of the line. You supply the lowest, the cheapest. You get the cheapest price in the world for your oil, and you get the cheapest price in North America for your gas. So you are the runt of the litter in North America. And now your mom is saying, yes, but you can't have as much milk as you did before when you're already the runt of the litter. That doesn't make sense. You're going to starve. You're going to get even worse. So I'm just not sure what she thinks she's going to be able to do. And I think on the environmental front, Jim, there probably are some things that might have got left a little too late. But even on the pipeline side, she says she's not going to promote pipelines. Well, if there's no real government action leading the charge on that, you just got to wonder whether these pipelines get delayed even longer. And oil sands production is still increasing. Heavy oil production in Alberta is still going up and is scheduled to go up for the next 5 years. So all of a sudden, we've got increasing production but less ability to get it out of the province. That is going to create a big discount for heavy oil producers and the oil sands in particular, I think, and that could end up being a real drag. I think that's where the big impact is going to be for this NDP government, is in the oil sands, because you've got projects that have been years in the making, getting permitted. These things cost billions, and they have to get once the companies have made the decision that they're going to get built, because these guys build to go through 2 or 3 cycles. So it could end up really meaning a big discount for Canadian oil potentially.
And, I mean, I've already heard from people in Calgary that businesses are looking to move to either BC or Saskatchewan because they're known to be more business friendly, and, not knowing what the NDP's going to do has them already looking to get out of Dodge.
Well, I haven't heard anything like that, but I will say I would think that 2 of the happiest people in yesterday's Alberta election were the premiers of BC, Christy Clark, and Saskatchewan, Brad Wall, because, you know, as you say, there's probably going to be some bit of spin out, but how much that's going to be, I don't know.
And I think the corporate tax hike they had planned for Alberta from 10% to 12% had already been announced by the Conservative government, but of course Rachel is going to be stuck with whatever the government promised, I think.
You would actually would be, Jim, but history says politicians don't always do what they say.
Oh, you're kidding. I've never seen that happen before. And I hope that
that's actually not going to have that big an impact on life in Alberta, Jim, and I'll tell you why. Because few energy companies are profitable, right? So, or pay taxes. So, you're probably looking at just a few of the larger firms there, a couple of the pipeline stocks, the big companies like Suncor. That is not going to really impact that many companies in Alberta.
But I was just going to say, the one thing politicians should take a look at is the Laffer curve about the more you charge in taxes, the less business you get. And a great example of it, working out the right way, Ottawa cut corporate taxes. Major corporations left the U.S. to come here. Burger King's probably, the best example. And government revenues went up, not down. They went up. So a tax hike doesn't mean more money so often. It can mean less for a government.
That's true. The question is, do they include those kinds of effects in their models? And some do and some don't. So, like honestly, if you get all the economists in a room and you get that many different opinions on that matter, but it's definitely a conundrum on the guesstimating side of things.
And I also heard a comment, it depends if Rachel Notley is going to be a Bob Rae, which was a disaster for the economy, or a Roy Romano, who saw Saskatchewan's economy grow.
I think she's going to really trend closer to Roy Romano. I really do, Ray Romano. I just don't. The difference in the left wing in Canada is quite different from central Canada to out here to Alberta. So that is truly the least of my worries. I think that the street here wants to hear some kind of sign from Rachel fairly quickly. But even the longer that she waits to get this done, and maybe she's got some dissension in her own party she needs to assemble, but I just don't see that being a big deal. I'd be surprised to see anything happen in a big way in Alberta. BC is a totally different story. We're a way more polarized province between left and right, and the differences are quite stark and dramatic. And whenever you do see a swing in government, it's a big deal. Like the reason that the Liberals got reelected is because the NDP basically bared their teeth and promised to basically turn Vancouver into an oilless port. And that just, people kind of realized that, wow, that's the thin edge of the wedge, that's a lot of jobs, that shows an attitude. Alberta, the NDP in Alberta is not like that at all. So I'm not that worried. It's going to be different, Jim, but it's not going to be that different.
And people who oppose pipelines should know one thing. The switch to oil being transported from pipeline to rail lines, you saw what happened in Quebec with that disaster there that killed nearly 50 people. A pipeline is much, much safer than railways. And in Seattle, in fact, they have protests because they want to see oil tanker car traffic stop and have them install pipelines.
Yeah. I think that the protesters really aren't against pipelines. They're just against fossil fuels and life. But God bless them. We do need some of the radical moments in every issue to kind of mobilize the masses. But I don't think that there's any question pipelines are much safer than rail cars.
And Keith, too, if the government wants to improve environmental standards, good on them. And people also have the confusion. Strong environmental rules mean bad business. I think it just means better business practices, but you still have business.
Absolutely. I would be really surprised to see that any significant environmental work they do is going to have a major impact on oil producers for any more than a year or two. The industry will adapt, find different ways. They're ingenious. That's what they do. They figure out ways around problems the most efficient way possible.
We'll have more with Keith Schaefer right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. Keith, what's happening with crude? Are we going to see prices continue to rise, or are they effectively at the peak we might see right now?
Oh, well, Jim, if I knew that, I would be rich. I'd be rich. The reality is, Jim, oil price has done way better than we all expected this calendar year. Because you got to remember, in January, which was the low, Nobody was really calling for $60 oil. So, and here we are, Brent's getting close to $70. And so two things have happened here that have really put a much more bullish spin on oil. One is that demand statistics around the world have really picked up. Before this crash here in December, January, we saw all kinds of stories saying, oil demand is inelastic to price. Well, that was just plain wrong, because even by the end of January, we had seen fantastic improvements in oil demand in the United States to the tune of 700,000 or 800,000 barrels a day. So if the market's talking about being oversupplied by 1.5 million barrels a day, and there's half of it right there. And then the Asian numbers started coming in, and again, it was quite an impressive leap. We saw demand in Asia, in China up 250,000 barrels a day, India 100,000 barrels a day, Korea 150,000 barrels a day. So all these things start to add up, and all of a sudden the oversupply becomes just a net neutral thing. So that was a big surprise, and so the street, I think, is staying with that. And then the other thing was that in the U.S., no one ever expected the rig count to fall off that strongly and that consistently. That was just, no one thought the industry had that much discipline. Nobody thought the industry really would lose any more than 40 to 50 rigs a week for a little while, when they went out and lost 90 rigs a week for like an entire month. So you're seeing oil do way better on the rebound than I truly thought it would. And now, Jim, I think we have to be prepared for oil to go even higher, even though there's still lots of spare capacity in the world. And that's one of the things that drives oil prices. If the theoretical capacity of our ability to produce is fairly close to what we're using, then the market gets nervous and they bid up the price. But what we're seeing now is the United States is peaking in its oil production. And that's about a quarter, i.e. 3 months ahead of what we all thought it was going to be. In January, we all thought, it'll peak out, sometime June, maybe July, and then start to be flat in Q3 and go down in Q4. Well, now we're seeing oil peak probably the last week of March. Oil production in the U.S. peaked around the last week of March. So unless there's any new large number of production that comes on here in the very near term, we're going to start to see production roll over here, and we even saw it today, or this week, sorry. This week we saw oil inventories drop by 3.9 million barrels, which was one of the first times in quite a few months when it has dropped, and oil jumped up $2. Now, it came back towards the end of the day, but the point is the emotion behind the oil trade right now, Jim, is bullish. The market doesn't want to really look at the fact that the oil rig count will come back up higher as oil prices go back up, but right now, every week, we're all expecting now that the U.S. oil production numbers are going to drop, and potentially drop dramatically through Q2. So even though fundamentals might not warrant a higher oil price, the emotion behind this trade, certainly every Wednesday morning, is going to be, I think, pretty bullish.
Do people also discount the demand from Asia? I mean, I don't know if this figure is still accurate, but China was selling 50,000 cars a day. India's economy, the growing middle class there, everybody wants a car. And if you look at the streets of Beijing right now, 10 years ago it was nothing but bicycles. Now it's nothing but gridlock.
Yeah, like I say, China's up 250,000 barrels a day, and you got to believe that economy has the ability to ramp up a lot more, potentially. So.
Yes, and I also read too that China is taking extraordinary steps to make sure if there's an economic downturn that people keep their jobs, because they know, but I think they have a political reason as well. You don't want any unrest.
Of course, absolutely. So I just think right now oil has to be you have to be biased to the bullish side right now, even after the run we've had, because I just think the emotion behind the trade is going to carry the price higher.
What about the situation for natural gas?
Well, that's an interesting commodity right now, and I think what we saw last week was quite a surprise, a bullish surprise, that the storage didn't increase very much, nowhere near what investors thought. And this is tracked quite closely. So when you see a number that was 10% off, as it was last week, 10% less, that really gets the market's attention. So I really expected gas to be quite a bit lower here because production has been so strong. But of course, demand has picked up. Like if we're running 5 to 7 billion cubic feet ahead of last year, demand's up about another 3 billion cubic feet. So the surplus, the oversupply here isn't that great. And of course, we need oversupply all through the summer because we use way more in heating in winter than we produce. So, right now, all the fundamentals, Jim, are still pointing towards a huge oversupply by the end of injection season. Yet the leading natural gas stocks, particularly in the States, their stock charts are looking good, and they actually broke out last week. So it's going to be, I think the next couple of weeks here for investors is going to be really interesting. If the next couple weekly injection numbers are more bullish than the street expected, you could see the street turn on natural gas here to the bullish.
And that's good news for British Columbia.
Oh, absolutely. Absolutely. Sadly, Western Canada will be the last recipient of any of that bullishness, but fundamentally, but the emotion behind the trade should carry the stocks higher.
Keith, thanks a lot for chatting with us.
Jim, God bless you.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.